So you think with all certainty that this will be the worst housing crash that we've seen in the history of America?
Yeah, there's no way it cannot be the worst. Housing is way more overvalued than anything. There's no comparison in history. And I look at history. Anybody looked at history more than me? I want to meet the person, okay? Nobody's looked at history farther back and in more depth than I have.
Harry Dent is a best-selling author and one of the most outspoken financial editors in America. Using proprietary research, Harry developed a unique method for studying economies around the world and uses his analysis to provide insights on what to expect in the future.
You can't even compare this bubble to any bubble in history. This bubble was 100% from artificial stimulus. $27 trillion. People are going to look back at history and say, what were they smoking? This is a once in a lifetime, a once in two lifetimes thing. This won't be repeated for so long because it will hurt so bad. We are about to see probably the biggest crash since 29 to 32 in stocks, and uniquely a deep and broad global and across most sectors crash in real estate.
So what do you say to the sellers, and when will people start to see massive home price reductions? Harry Dent, sir, welcome back to the show.
Nice to be back, Todd.
You know, earlier in your career, you were a man that fixed companies, big companies, and you would study their industry, look at their business, and successfully kind of navigate and direct them from the hazards of ahead. And today I want you to fix the housing market. You think you could do that?
Well, I mean, this has been, Todd, the greatest housing boom in history. And I have to remind people that the last bubble era we had was the early 1900s into 1929. Stocks bubbled like crazy there, and business and other things, but real estate didn't bubble that much back then because mortgage lending was too tight. Back then, a typical mortgage loan was 50% down and a 5-year term. Okay, so hard to speculate with that. And of course, mortgage loans, therefore, were even harder to get. So the roaring 20s was the last bubble time we saw in investments, but it was mainly in stocks and business, and it was not nearly as much in real estate. So when the whole thing crashed in the greatest depression in history, real estate went down 26%, which was not that big a deal. Stocks went down 89% and took 25 years to just get back to the highs of 1929. So this time, what is different is we've seen not only another round of bubbles, but two bubbles this time. One, a natural one in the late 90s that shifted from stocks. The stocks bubbled first, 95 to 99, early 2000. And when stocks started to crash because they got so crazy, real estate, people took off and started speculating more in real estate because real estate was not bubbly yet. And then real estate bubbled into early 2006, and then it crashed. And the big difference there was real estate took 6 years to bottom out, although most of it happened the first 2 to 3 years along with the stock crash. But real estate took longer to bottom and then came back, and now has had the longest bubble in history along with stocks. I mean, but in this case, real estate from 2012 into 2025, so 13 years. But stocks had the longest bubble, and it was all bubble in history from 2009 to now. So this is the greatest, longest bubble in history. And worse than that, Todd, this bubble was 100% from artificial stimulus. Even the roaring 20s bubble, their governments were not printing money and pushing down interest rates to artificial levels. It was just good times with strong demographics of spending and low inflation, like the 90s. The 90s was a natural boom, 100% natural. No big government stimulus and stuff. Well, the roaring 20s was like that, and then it crashed. But this time, this bubble from early 2009 into now has been all from artificial stimulus. And I'm the only guy, Todd, that's calculated the number, okay? $27 trillion, 1.5 times the average GDP in that period. I mean, just a massive pouring that much money into the economy. And you got to remember stocks and things in real estate, they're measured out of profits. Well, I'm talking GDP. It's like the whole sales or the whole commerce of the economy. 1.5 times that was poured into it over the last 16 years. So there's been no stimulus like this in history, never this long. Usually stimulus comes after a downturn and to help bail it out, not to accelerate an upturn. I mean, what they did, they bailed us out of the 2008-9 downturn, but and that downturn would have gone a bit longer, but they just kept going because what they didn't realize, Todd, is something I've been preaching all the way back to the early 80s. We were due to have the greatest boom in history because of the giant baby boom generation simply entering the workforce at age 20 on average, but predictably, and peaking on average at 46 in 2007. So 83 through 2007 was a natural but a much larger boom than any time in history, which I was one of the few people that saw that before it happened. And people thought I was, now I'm more bearish, but people thought I was crazier then for being that bullish in the 80s, saying, oh no, that this 80s boom is not a comeback from the 70s long downturn and long recession and the rise of the Japanese and all that sort of stuff. No, this is a long-term boom that's going to be greater than anything we've seen. In other words, everybody thought the US had already died after 1980. And I'm like, no, we still have the biggest baby boom in the world, and we're going to have the greatest boom in history into 2007. Well, 2008 hit, and exactly, I mean, again, I was predicting late 2007 would be the top all the way back in the early 80s, okay? So that hit, and much harder, and Ben Bernanke was now the Fed chairman, and his thesis, his PhD thesis, was the Great Depression. So when 2008 hit, he saw the same thing I did. Did it look that this was 1930? This was not another recession. This was the beginning of a bubble boom bursting and a more depression, because depressions in history follow bubble booms. Deep recessions follow major long-term booms, like the 50s and 60s peaking and going down. Yeah, we saw 40 to 50% stock drops. We didn't see 80, 90% like 1929 to 32 and like we saw 78% just in the first tech bubble crash. So this is a bubble era. The bubble got extended with this 20. I mean, people are going to look back in history and say, what were they smoking to think they could just keep throwing $1 trillion to $2 trillion a year into the economy forever? And again, Todd, they did not intend to do this. When 2008 hit, they thought, we'll throw $1 trillion in, that'll get us over this short-term imbalance, financial crisis, and we'll be back to normal. Well, of course, my statistics said no. The greatest generation has peaked, and we're going to be down for 12 to 14 years, and we won't get back to new highs for another 10 or 12 years after that, just like every generational boom in history. So that was the unique view I had. But of course, nobody listens to me. I'm a innovative, forecaster, not mainstream, and never have been. And I grew up speaking to small business entrepreneurs at Tech, the executive committee, now called Vistage. I was one of their top speakers for many, many years because nobody else would listen to me. I had a new theory, and economists are not innovative at all and do not look at new theories. And so that's how I got known. But the point is, the 2008 crisis was predictable, but the government overreacted to it, not understanding it, and then has just been printing money and running huge deficits ever since. The deficit's like $2 trillion a year now. What? And this is business as usual. They haven't had a balanced budget since 2001, 24 years ago. So that's what this boom was. It was natural up to 2007, but everything after that, the most dangerous, 100% artificial stimulus. And now this bubble is ready to burst, and it would have burst, much earlier. We saw the first burst in 2008 to 9. That was a natural burst. We should have seen a second burst into 2022 while the demographics were still very weak. And the another one of my major cycles is a technology innovation cycle, and that peaked in 2019. And so all the cycles were down 2019 to 2022. So we should have seen a worse downturn than 2008, 9. Then we'd have been over with it. Well, now I think we have to see that downturn now in a time when the millennials, starting in 2024, are now we don't need stimulus. In other words, now we have natural trends driving the economy upward again. But the millennial generation is more spread out and never as steep a boom as the baby boom was. So we'll never see the 80s, 90s, and early 2000s again. But we never, the big thing to understand, Todd, we never cleared out the massive, and I mean borrowing unbelievably compared to any time in history. Debt ratios, consumer, business, government, financial sector, all debt ratios stretch way beyond anything in history. We got massive debt. We got financial asset bubbles, and financial asset bubbles in history, Todd, are always associated with debt bubbles. The debt causes the financial asset bubble because it brings more money, not just into consumer spending, but into the whole economy and into investments and everything. So markets get overvalued. And now we have unprecedented real estate bubble, way more than the roaring 20s. I mean, and unprecedented stock and financial asset bubbles. Even gold. Gold is in a bubble. I got people like, down here preaching, oh, yeah, like me, oh, we're going to have a big crash from this bubble and saying gold's going to be the solution. Gold has bubbled up more than stocks. So the solution is the safest bonds on the earth, and those are, even in a crisis, U.S. Treasury 10 and 30-year bonds, particularly the 30-year bonds. That's what went up in 2008 when everything went down, including gold in the end. So gold is not the worst place to be, but it will go down. Peter Schiff is not going to be right about that. Gold will not be the safe haven, but it won't be the worst place to be either. It won't go down as much as stocks, and it won't go down as long, and it'll come back because the big long-term gold trend is? India. India is not China. India is bigger than China. India is going to boom forever. China's already peaking and actually going to lose population in the next several decades. And Indians spend 3 times of their income on gold that Chinese do. So when India drives the next 4-decade boom like China did from the 80s to recently, gold is going to do very, very well. But gold is not going to be the savior here. So I'm telling people, you got to get out of all financial assets you can, all real estate that you don't live in or need or make good predictable. I mean, if you're in the multifamily marketing, markets area, and you're making good money, and people aren't going to be able to afford a home in a down economy, then you'll do okay. But if you're in anything else, particularly in upscale real estate, and Todd, the biggest thing whenever presentation, I always get usually little old ladies, wealthy little old ladies, come to me after and say, Harry, let me tell you about my real estate on the cliffs in La Jolla, and it's so beautiful, and it will. Harry, obviously that can't go down. No, that's what will go down the most. The bigger the bubble, the bigger the burst. And upscale real estate, and particularly vacation real estate, will bubble the most and go down the most. And apartments and multifamily, for especially affordable and rental stuff, will hold up the best. But even I'm reading an article yesterday. Multifamily real estate in a lot of areas has been overbuilt and is now going down in value. And imagine if we go into a deep recession instead of just a little bit of a slowing. So people are going to call me Chicken Little, but I deserve to be able to say this because I was the most bullish SOB in history in the early 80s and even into the early 90s before this bubble took off, because I saw the baby boom driving everything up. And and again, all sectors and real estate and everything. But I'm saying this, we are about to see probably the biggest crash since 29 to 32 in stocks, and uniquely a deep and broad global and across most sectors crash in real estate, with only multifamily holding up fairly well. And even that will go down some.
Hey guys, I hope you're enjoying the show so far. I just wanted to take a brief minute and share some exciting news. I have just released my new Todd Simple home buying course. This course is designed for anyone wanting to know how to buy a home. It's 14 lessons, includes worksheets and resource guides. It's designed to take you through the entire home buying process from start to finish. You'll learn how to represent yourself should you want to avoid paying real estate commissions, the best ways to shop for a home, how to avoid costly mistakes, what to look for when touring a home, negotiation tactics, and so much more. If you've followed me here on YouTube, you know that I am very transparent in my videos. In this home buying course, I hold nothing back. In fact, I would go to say that no one has uncovered the home buying process like I have. I'd even recommend this course to most real estate agents, as they will probably learn more about the home buying process than any other training that they've received. I've even made a way for you to gift this course to your family and friends. Visit saxrealty.education. The link is also pinned in the comments below. And for a limited time, I'm offering a 10% discount on Todd's Simple home buying course. Just enter the coupon code TODD when checking out. Now back to the show.
This is going to be an everything. It's been an everything bubble, and that didn't even happen in the Roaring '20s and past bubbles in history in the 1830s and 1870s and stuff. This is going to be a unique everything bubble crash, and people are not going to believe it till they see it. And I'm telling you, you better act now, because this has already been stretched beyond belief by this 27, and people don't know that number, 27 trillion. I
It's a
mean,
lot of money.
this is going to go down as what were they smoking, or the biggest financial crime in history. It's one thing to stimulate an economy for 1 year, throw $1 trillion in like 2008 or 9, just to help it kind of get through the crisis. It's another thing to pour $27 trillion in over 16 years. And that's just the US, not Europe, China, and the rest of the world. And China's the biggest bubble in real estate in the world. China's bubble is going to make ours look like nothing. And I think real estate here, after going down 34% on average between 2006 and 12, and nobody thought that was possible, I think it's going to be 50 to 60% here, and 70 to 80% in China. And the poor Chinese have 75% of their net worth in real estate, are going to get crucified more than any people on earth by a financial crisis.
You know, if real estate prices crash 50%, that really would take us back to about 2019.
Yeah.
And
I'm saying the best reference point, Todd, mid 2012. That was simply the last bottom. And that was later than stocks, took longer to reach there. I mean, if I looked at any financial chart in history, I don't care what it is, jelly beans or stocks or anything else, you go back after, especially a strong boom, you just go back to the last major low. That's where the markets are going to naturally migrate. That is 2012 in real estate, and that is down 62% for the average home. So imagine an upscale penthouse somewhere, that could go down 80%, which again, people told me no way real estate could go down 20 to 30, and it went down 34% last time, average, and 50 to 60% in the high end. So I'm just saying, don't look a gift horse in the mouth. And I'm looking at selling my primary residence here. I'm just fixing it up a little late, but I'm putting my house on the market in early September.
Harry, and we could pull up a chart, but I think that you know it as well as anybody. When home prices start to decline, or at least since World War II,
yeah,
as home prices start to decline, and I hear what you're saying about 2019, we were definitely, if not in a recession, headed to a deep recession, I believe. and then COVID happened, and then the money printing.
Yeah, the
But
11 out of the 27 trillion came just a couple of years after COVID. COVID
right,
was the blowout, the stupidest thing in history, because who would think there's something wrong with the economy that slows down for a few years because everybody's sick? I mean,
yeah,
there wasn't a need to stimulate there, okay, for people, so people didn't lose faith in the economy, and they doubled down instead. I think that's going to go down as the biggest government stimulus mistake in all of history.
I agree. But when we look at specifically 2008, as we were watching home prices fall, it only took a couple, well, I think it took about a year. I think was it 2009 or 2010 that the Fed started buying I think it was 2009 they started buying mortgage-backed securities. And then as that response, they artificially suppressed the mortgage rates. People could refinance or people could buy again, and home prices started to skyrocket and then back up again. And then we saw the same thing in 2019. The pandemic hit. The Fed started buying aggressively mortgage-backed securities again, bringing mortgage rates to all-time lows, historical lows. And when you were talking about the mortgages back prior to the Depression, yeah, they were 50% down mortgages and they were interest-only loans. So there was a high default rate. That's why they came out with FHA. But every time the housing market seems to go into a correction mode or some type of downturn, the government or the Fed, the Federal Reserve, steps in and does something. When you say that prices will crash 50, 80%, what will they try and do? I mean, obviously, they're not going to want that to happen. So what will be their next response?
Now, so here's the problem. I mean, what is free market capitalism? It's the minimum of government intervention. It's a bottoms-up economy it's called the invisible hand. Adam Smith invented the whole damn concept in the late 79. Most brilliant thing in history, and the marriage of democracy, which gives everybody an equal vote, but gives the people who contribute total merit-based system. It's the greatest marriage in history, greatest system in history, and everything they've been doing in the last 10 or 20 years is to basically go against free market capitalism. The markets know how to redirect financial resources and bring prices down if they get too high and quickly get rid of excess capacity and get things. That's what free market capitalism does. It's a self-correcting, balancing system. That's its genius without government interference and steering, which a few dumbass people on top of government are never going to make as good decisions as the invisible hand, the votes of zillions of people. That's the genius of the system. So we're basically saying free market capitalism has made us rich, and I'm talking just in 1 century, 10x, okay? If you go back to 1700s, probably 20x or something. Raised our standard of living so much that you can't even compare it to any time in history anywhere, not Rome or anything else, okay? And now we're saying, oh, well, we don't like it now that we're going to have a recession or housing's overvalued and we could have a housing crash and some banks could lose some money and some people could default on their loans. That's how free market capitalism works. It lets everybody, all the flowers bloom, but then you have to shake things out. Recessions are as essential, and I would say more essential than the booms, because recessions clear out all the failures. So because who knows? Nobody knows who's going to succeed. People say they do, but they don't until it happens. And most of the genius is Jeff Bezos. People thought he was a crazy man. He looks like a crazy man, tell you the truth. I used to throw him up in my newsletter 10 years ago, say, is this guy crazy or a genius? No, he's a genius, okay? He saw almost all retail going on the internet way before anybody thought it'd be more than books and CDs and some other simple things, okay? But that's how capitalism works. You can't second guess capitalism, or it's not free markets. So governments are killing the golden goose here, saying, well, things got so good. Now we're going to have to go through some, real estate corrections and some stock crashes, and people are going to lose money. and they're throwing out the system. This is, to me, the worst crime in history. I've been, cranking about this for 2 decades now, and it doesn't matter. We're only going to get the lesson when these guys fail so bad. So that's exactly what you're saying. Every time we have a crisis, okay, 2000, 2002, okay, they stepped in there. Well, 2008 was the big one. They don't know why. I knew why in advance. It doesn't matter. It's a big one, so they overreacted to that. Well, we're going to have a big one. You got, at some point, people are not stupid. They get, wait a minute, we keep having these bubbles. They keep crashing. Then the government steps in and creates the next bubble, and then it crashes. Every bubble goes higher and every crash goes lower. Oh, no, this is not working. I think this is the straw that breaks the camel's back. After this much stimulus for this long, if we crash again and everything goes back, and again, I'm telling people right now, I can tell you exactly where stocks are likely to go. The 2009 lows, March 2009, when they took off. Real estate was longer to recover. The mid 2012 lows in real estate. So you can look at individual real estate anywhere in the world or in the United States, because real estate is much more regional than stocks in the stock market. So it's good to be able to say, I tell people, what was your house worth in the middle of 2012 at the last and the only major bottom in real estate, okay, since way back, okay? That's where it's going to naturally go. That's what history would say. I mean, if I looked at the real estate chart or any chart, I can tell you 1, 2, 3, 4, 5. Okay, we're in a fifth wave peak and almost everything. Where do you go? Back to the fourth wave low. That's 2009 for stocks, 2012 for real estate. And that means
Wow.
real estate doesn't go down as much as stocks. But the problem with real estate, it's mortgaged heavily. So the pain is actually higher in real estate, especially for the banks. They don't
Wow.
lend money, a lot of money against stocks. They lend a lot of money against real estate of all types.
So you're saying they can't fix that? They cannot. There's nothing that the administration can do or the Fed can do to prevent this from happening.
That's right. Well, what they've done is the wrong thing. They've just kept making the bubble bigger by responding to it artificially. They didn't change anything. They didn't give incentives to do something more. What I would have done in 2008, I would have been the government. I said, look, we got a lot of excess capacity. We overbuilt stuff and things are overvalued, real estate, stocks, everything. I would have said, the government is going to, if you write off overvalued assets, particularly real estate, we will take 30% of that hit. The government will take that. We'll take it on our larger debt because we can borrow cheaper and stuff. And we don't want the system we're going to backstop, but we're not going to stop the system from self-correcting because that is the real solution. And if we'd have done this back and let it go for stocks longer, that stock correction should have gone into 2010. The real estate correction should have gone longer, maybe 2013 or 14. If we'd have let those things played out and not stimulated so heavily against it, we'd have been over this a long time ago. And now the millennials, we don't need stimulus now. The millennials are driving the next boom since late 2023, right on cue. But that's not going to matter enough because their rise is not as steep as the baby boom any time in the cycle. And we have all this overhang of overvalued real estate and bad loans, zombie companies, and bad debts are at all-time highs and have to correct. That's so you can't have free market capitalism and only get the booms and not the busts. And I say the busts are more important because I was a turnaround manager early on. I think as you hit it at, I used to go into small businesses and turn them around, which is a lot easier. When you come in, they're already in trouble and you're an outsider. The founder's never going to admit how bad it is. The shareholders are never going to admit. I come in, bam, and I can make, in a downturn, I can make 3 times the change in half the time. So there's nothing wrong with crises and recessions. We have these great booms, and then in a fraction of the time, maybe a third of the time, you can flush out all the bad debts, all the zombie companies, and get healthy again, and then boom again. But if you fight the downturn, the boom gets less and less healthy, and the economy gets more and more, as health people would call it, toxic.
Yeah.
I mean, my God, we got so many, and that they're called zombie companies, and I think it's like 23% of the large companies out there are only surviving by not meeting their debt service. They're paying their normal expenses, but they're stiffing their creditors and pushing them back to survive. And when zombie companies grow, that's what a recession's for. Flush them out. Now, it doesn't mean they die. It means they have an excuse to restructure debts. And that's that one of the greatest inventions was in the US. Chapter 11 bankruptcy instead of Chapter 7. Instead of a company gets in trouble, just kill it, let it be protected for a short period of time, and restructure its debts in a civil way and not kill the company, but everybody takes a hit. The company takes a hit, the creditors take a hit, but it's the best solution. And that's what a recession is. Recessions are keeping us healthy. And the government and the Federal Reserve and politicians have come up with a theory. Our job is to never let recessions happen because they're bad, 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 bad. That's like saying we shouldn't sleep. Let somebody not sleep for 3 nights and they will be a babbling idiot. 3 nights is all it takes. And
Well,
that's a fact.
consumers are in debt. And if they don't have a job to keep that going, then you're going to have all of the homeowners not paying, or a lot of homeowners not paying their mortgages or their debt. They can't necessarily wipe things clean as easily as a corporation can, because I mean, the only thing they would be wiping clean would be their ability to charge on their credit card, and they need that to live, or give their car back and they need that to drive, or stop paying their mortgage and they need that for the roof over
Okay,
their head.
Todd, here's
How does
what the
this
crucial
happen?
difference is, and this is what people don't get. That's the beauty of a recession. When the whole economy goes down and everybody's struggling, then banks would be forced to restructure these loans down to what people could pay. They might have to write off not the whole loan. Now, if you just go into Chapter 7,
Okay.
you go into failure or somebody fails, then you lose the whole loan. But in a downturn where everybody's in trouble, what would happen is in the government should support that. That's why I say government should say, if we do go into a downturn and loans start failing, the best way to govern is not to stimulate the economy artificially, but to basically you reward the people that write down the damn debts.
Got
Again,
it.
like I said, give them a 30 for every bank that writes down a mortgage loan that's in trouble. You know, the government says we'll take 30% of that to ease your pain and make it, and you got to do it now, or this offer, it's a one-time offer. Okay, that would be
Well,
a
that would be
win-win for
massive.
everybody, and the
That
government
would
would be able to take on that extra debt easier than, or the failures easier than the banks and the consumers and the
Well,
household.
they would have to also reward the other people through property taxes that are paying based on their home values. They would have to restructure that. So what you're saying is, instead of foreclosing on these homes eventually, for the people that haven't been paying their mortgages, or that have been struggling, or have had 4 or 5 remodifications or refinancing, um, and they still aren't making their ends meet. Their houses are falling apart because they can't afford the repairs. So what you're saying is that as the as the housing market is adjusting and the prices are coming down, then they would have to refinance everybody, readjust, give them sort of like a debt jubilee,
Exactly.
if you will. And that's what you're saying that the
Government should
government
help
should encourage.
incentivize and facilitate the restructuring of debt that should never gotten this out. We should have never been this liberal in the first place. I mean, people were getting loans with no money down and questionable credit in the 90s, okay, and 2000. So that, and I'm sorry, that's history too. The longer a boom goes on, the more everybody gets complacent. Businesses take more risk. Everybody borrows more. Everybody thinks it's okay, because the longer a boom goes on, people think it's going to last forever. Well, the smart money never thinks that way. The smart money, the longer they see a boom going on and debts build up, the more they question it. But that's not what most people do in most banks and most businesses. So that's why the recessions bring reality. And we've had a major, since World War II, and even more before that, but even since World War II and a much longer stable boom, we've had a major recession once every decade and sometimes two, a couple times too. These people, again, see the recessions as we did something wrong. No, recessions are an essential and probably the most efficient and effective part of free market capitalism because there is no, bleeding heart thing about it. Hey, something goes wrong. Okay. Well, you have to reorganize your debt. You have to renegotiate with your creditors. And again, we didn't even have bankruptcy laws. That was a huge innovation in history, and it came from the United States. That instead of just going Chapter 7 and companies going under and just failing, you take a pause and you renegotiate the debts to something that everybody can live with. Everybody loses but if the company goes down 100%, then everybody loses more. So Chapter 11 was wisdom. And now we don't use that in the economy. And instead we say, oh, we can't have recessions because we're going to have to restructure debts and they're going to fail. Well, it's better to have a rational restructuring of debt than to push it so far that it just collapses like 1929 to 32 and everything goes under and you end up with 25% unemployment.
So, and I hear you when you're talking about the consequences of a Chapter 11. It should make the creditors really think about when they lend money because that is the risk. So it should tighten lending standards. However, if they don't keep peddling loans and making it easy for people to get loans, the economy does slow down. So that becomes a natural fulfilling prophecy in itself. But Harry, when will
That's
people?
going to happen anyway. The difference is, Todd, you have a mess already. Okay, if there's a crisis, and I was a crisis manager, so I'm used to this. Okay, it's the way I think naturally. You have to look at reality and say, how do we minimize? But you don't say it by blowing it away or borrowing more money when you're already too much in debt or doing some flimsy deal or something like that. You face it and you say, how do we cut the expenditures that are least needed? And that's always overhead and not the direct stuff. How do we minimize the losses here and move ahead rather than just keep blowing it off and wait until you just go chapters. When you go Chapter 7, everything fails and everybody loses 100%. Chapter 11 is brilliant because it allows the minimum loss to keep going forward and everybody comes out of it, most of the creditors and the company. In a Chapter 7,
Gotcha.
the company dies and the creditors lose everything. So Chapter
Okay.
11's a win-win in a lose situation. It doesn't
Gotcha.
change the fact that a company's in trouble. It just says there's a better way to get out of it than just to let it go bankrupt and just.
So when will people start to see massive home price reductions?
I think it started article yesterday, and my wife's aunt was there, Cape Coral, Florida. It's called the worst housing market in America. Prices there are only down like 12 to 15%, but it was one of the last affordable places in super high growth Florida, especially for retirees. Again, my wife's great aunt was there and all this sort of stuff, and it's just booming like crazy. And they overbuilt, and now you can't sell a home. They got homes on the market for a year or two. People keep dropping prices, dropping. It's a total mess, and it's falling apart. And even with all these low interest rates and all this stimulus, Cape Coral is the beginning of what's going to happen everywhere. Real estate is the same house that 25 years ago would have been 100,000 is now 500,000, and adjusted for inflation, it's still at least 2 times the value. That's not sustainable. That's not good for the country. High real estate costs, everybody thinks it's good. It's only good for people sitting in the damn stuff. It raises the cost of living and all business. It's bad for the economy to have super high real estate prices, okay? So that's what's happening. Cape Coral, Central Florida is already melting down, even though the economy's still chugging along with all this stimulus for everybody else. This is going to happen everywhere because real estate needs to come down at least 50%, and I say 60% plus to get down to where it's sustainable for a win-win growth economy for the next boom driven by the millennials. And if we don't do this, it's going to be the millennials, the young people that are the biggest losers. The baby boomers would rather asset prices stay up and the economy go to hell, but the millennials who are going to drive our economy, because the baby boomers are going to do nothing, including me, going to do nothing but die over the next 10 to 20 years, okay? End of story. Die, okay? So we don't matter anymore. The millennials are the new generation, and Gen Z and everybody after them in the third world, way more than the developed world. These are the big winners if we clear out this real estate bubble, do the best Chapter 11, restructure prices, restructures debt, but don't kill them. Don't kill the creditors. Don't kill the homeowners and stuff, and come out of this. But everybody just wants to do the easy way and hope it'll go away. Not going away. End of story.
Yeah, when you talk about real estate prices being high is bad for the whole economy, that's because of the whole ball of wax when you're talking about housing products,
The
housing
biggest
products.
cost of living and the biggest cost of doing business.
Yeah.
Freaking real estate.
Yeah, exactly. Yeah.
How
So,
hard is that to understand? Everybody thinks, no, real estate's going up. I'm getting rich sitting on my ass doing nothing. That's not good for free market capitalism, for people to get rich sitting on their ass doing nothing. That's the problem with the economy. Everybody just wants to speculate and nobody wants to work anymore. That's not good.
well, that's an interesting statement because it seems like in the last 20 years, you have seen more self-help, real estate, get rich quick courses and seminars and everything else that we've ever seen in the history.
They're just gonna go till the whole thing busts, and then they're gonna look like it is.
Harry, what about the big, beautiful bill? You don't think that's going to help kick the can down the road?
A little bit. I mean, all we've been doing is kicking the can down the road since 2008. That's the problem. We've been doing it for 16 years. And again, Todd, when I look at history, anybody looked at history more than me, I want to meet the person, okay? Nobody's looked at history farther back and in more depth than I have, okay? Especially through all of modern civilization back to 8,000 BC, okay? When agricultural revolution really lifted us into a new age, and then the industrial revolution and now information revolution, okay? So I mean, this is reality is you want people to take risk. You want people to borrow, but there has to be accountability. If you take the accountability out and you make it too easy, people are going to overinvest in the wrong things. And they're going to have more and more excess capacity, and it's going to just create a bigger bust down the road. And therefore you waste resources. My number one, Todd, when I was in college and started my business major, and I had this great finance teacher and stuff, and he'd draw out these cycles and stuff. And I'm like, if people could just see these cycles coming, then they wouldn't invest and overbuy the most at the top. When you overinvest and overbuy at the top, you're just creating waste that has to be flushed out. It's bad for the economy. People need to be investing more, buying more in times when it's more affordable and when we're coming out of a downturn, which they're too scared to do. But what people do, and especially now, they've kept this boom going on so long, people think we will never see a major recession again. The people are saying this. Economists are saying this. We don't need recessions anymore. I'm like, if you're saying we don't need recessions anymore, guess what, Mr. Economist? I bet you've never started a business or run a business or had a business because you don't understand business. Failure is essential to business. That's how people learn. That's how we learn growing up. That's how people learn in business. The key thing is to learn, restructure quickly in the best way possible, and learn, and then get back there and succeed. Failure is the secret to success, and you cannot have success without failure. And the entrepreneurs that become these billionaires and Jeff Bezoses and stuff are the ones that fail the most on the way. They have the guts to fail, but they learn from the failures. And Elon Musk said this last year. He said, the problem with most entrepreneurs, they cave in after their first failure. If you're an entrepreneur and you cave in after your first failure, you shouldn't have even started. Because I was an entrepreneur and I consulted to entrepreneurial companies, more than Fortune 500. I started there, but I took it down there. All they do is fail. That's the secret to success. US allows not just the opportunity to innovate and succeed, it allows failure. George Gilder was my favorite economist because he was the first economist to say failure is essential to free market capitalism, not just the freedom to invest and succeed. Failure is essential, and it is. How else are you going to learn?
Harry, do you think when you say, and I agree with you, if we could look at the cycle, and there are cycles and there are recessions as a natural occurrence in the cycle, booms and busts, before the manipulation, especially the stimulation through printing more money, if we go from 1971 backwards, you're right, recessions happen more frequently, even dating back to the 1800s. Recessions would happen every 12 or 2 years or every 3 years. It was a price correction. The question is, now it's almost like we hide the charts. All we do is through mainstream media is push narratives. We try and prevent the failure. We bail out too many businesses, too many people based on their decisions that they make. The question is, if they saw the chart and saw that, hey, we are headed towards this natural occurrence, which is a downturn, a correction, you wouldn't have agents pushing better buy now before it's too late. You wouldn't have buyers having FOMO, or parents even giving money that they've amassed through investing, a lot of them, to throw money at an overpriced asset to say, hey, look, here's a check for $100,000 in case it doesn't appraise. Here's a gift. Buy it high, buy it high. It's only going to go up, only going to go up. Are people that are looking at homes right now and understanding, I mean, look, I'm a real estate broker. That's how we make our money, when people buy and sell houses. But forgetting that, leaving that, letting that aside, are people making mistakes by buying homes right now?
They are. They are. Now, I mean, early on that was motivating me in college. I'm sitting there saying, if people could understand these cycles, we wouldn't so overinvest at the top, and we wouldn't be so hesitant to buy when you should buy near coming out of bottoms. Okay. But people have to have understanding right away. In a short period of time, I identified two important cycles. A generational cycle every 39, to be exact. It was 40, I used to call it. 39 years. Generation spends for about 26 years. And then the Gen X follows the baby boom, and you have a 13-year downturn. Every 40 years, we see a 1929 to 42 or 1968 to 82 slowdown in the economy. That's predictable. That didn't happen because the government screwed up, or we did this or that, or there was a war or something else. There's another predictable cycle, the decennial cycle. We have a downturn, stronger or weaker, for the first 2 to 3 years of every decade. 2000, 2002, 80 to 82, 90 to 91, blah, blah, 2008, the only reason we didn't have one 2010 to 12 is because the demographic side, the 40-year cycle, went down from 2008 forward and eliminated the need for that one, okay? These are two cycles alone that would have avoided most of the worst downturns for the whole time any of us have been born. Two simple cycles. 46-year lag on the birth index. That's not complicated. I can project that out for 50 years. Decennial cycle. Look out in the first few years, 2000, first 0, 1, 2 years, you're most likely to get some sort of recession and setback, because every 10 years businesses overexpand before they forget and then have to go through corrections. Two important cycles. Simple. When I get audiences, Todd, I don't have, old ladies won't even go to the bathroom while I'm speaking because they're like, oh, this makes sense. It's not hard. And that was my motivation. That if people could see these cycles, they would avoid under and over investing at the wrong times, because that's exactly what people do. Underinvest in the early stages, too afraid after the last time. The worst things go down. The smart money, the more they go down, the more they go, yay. Then the smart money, the longer something goes up, they're like, this ain't lasting, folks. That's what the smart money does. Everybody needs to be smarter. And again, and I found more cycles since that. Now I have a 45-year technology cycle, 39-year generation cycle, did this decennial cycle, a 500-year mega cycle, which we're right in the middle of the 250-year major surges in history. This boom is not going away globally. We're in the middle of one of these, like the 1400s to the 1600s, one of the greatest expansions in history. This happens every 500 years like a clock. So people can understand some simple cycles and just be more rational. You don't have to, I can't call it the top, the day of the top and the week and all this stuff, but you can at least know when something's getting overdone and when it's due for a downturn, and not be the person that finally makes your biggest investment right at the top. And then 3 years later, you go, oh, I'm the dumbest person in history.
Let me be the devil's advocate here. So, if we look at, and everything you're saying is absolutely true. Just look at asset prices of housing. The problem that I see is not that home prices have risen so high. The problem is that incomes have not.
Exactly. They have to go in line with income. Yeah.
Right. So when we look at the chart between median household income today and median home prices, it has never been farther apart.
Exactly. That's right. In other words, that, let's say just in roughly that the wages have doubled in the last 20 some years, and real estate prices have gone up 4 times. That's
right. Still hasn't mattered. Right. So with being the devil's advocate,
has to come down 50% to get in line with wages, is what it said.
Or wages have to rise significantly.
Well, that's a lot harder. Well, in an aging society, do old people get more innovative? No. Everybody in the developed world is aging. Aging is not good for productivity. People's productivity cycle hits the most from 20 to 50, okay? And then it flattens, and then it declines into retirement. It declines. Everybody's getting older. Japan, look at Japan. How much stimulus do they had? Way more than us. They keep going down because they're an aging society. And their problem is they don't have babies and never have. And on top of that, they don't even encourage, nevertheless allow immigration. If you're not going to have babies, then you've got to attract immigrants. Well, we have more babies than Europe, and we have more immigration than any other major developed country, but we are aging. Our average age used to be 20, then it was 25, then it's 30, now it's 34, and it's going towards 40. The older you get, the less potential you have just because of age. And Japan is just going to die, and South Korea and China is going to be the first as an emerging country. And I can project they're going to decline in population. They're going to lose 40% of their population in the next 50 years. What? An emerging country? A developed countries, Japan, that's a foregone conclusion. This is going to be the first emerging country to lose population because China always had a one-child policy. And now the government said, oh, that's stupid. Why don't we have a 2-child policy? Guess what? They raised it to 2 or more. Nobody's buying it. The Chinese, by being forced to do it, realize their standard of living is much higher when they don't have so many damn kids. And the Chinese are not responding to this 2 to 3 child policy.
So what happens if they do stimulate? If we look at the times of printing the most stimulus, it seems like that money goes into the wealthy's pockets, right? I mean, so
it goes more in the wealthy pockets.
We have,
especially if it drives
had more
and stocks up, because 1% of the people control 40% of the wealth, and 20% of the people control 80% of all financial assets. So it is going to, when it drives up financial assets, because you're pouring more money into the system to chase these assets. Especially when they print money. Printing money is particularly that way. It just drives up assets, real estate, stocks, and stuff. That benefits, it makes the income inequality even more so. I would rather, if they are going to stimulate the economy, and I don't think they should overdo this, better to send $1,000 checks to everyday people if you are going to stimulate.
Yeah, and that wouldn't be enough.
Financial assets.
Yeah. Do you think that we'll see a time where if home prices don't correct, or maybe they correct this time, and maybe for whatever reason the forces allow it to happen, or, despite their efforts, it corrects anyway because people just stop paying their mortgage. I mean, they just say, you know what? I don't have the money. Unemployment rate goes up. The economy is already starting to slow down.
And if you're already in trouble as a person and your credit's already probably bad, it's no big deal to just still
No big deal.
pay. Nobody
I'll
likes
just stay here,
anyway.
or I'll stay in my
Nobody
house.
likes you. So
Yeah.
yeah, the people when they see other people defaulting and they realize things are getting worse and there's no way out anyway, it's very easy to default. Just stop paying them. What are they going to do? Kick you out of a house when there's empty houses everywhere and they're getting more and more houses every day and they can't even sell them and prices are crashing and them selling them is causing. So yeah, the easiest thing to do is the person to just say, they don't say, screw you. They just say, I can't make the payments for now and I'm just going to have to stop and I'll let you know. But of course that can happen. By lending too much money against houses and driving prices up unsustainable levels, the banks should take the hit on this because they're the smart money here. Everyday people don't understand all this stuff. And if somebody tells them they can borrow this much at this special low rate for the first few years, why wouldn't they do it? It just lowers their payment and stuff or gives them a bigger house. The
Do
banks
you see
smarter money and know not to overextend and overlend, but they're the ones that have driven this whole thing.
do you see a world where the government would just say, "Hey, your home borrower is not paying their mortgage. You take the house back,
Exactly.
and you
Exactly.
keep that, and you keep the house."
The government
You,
intervening in the system with the banks and saying, we're going to structure that. We're not going to kick the person out of the home because we're going to have to kick too many people out and it's going to make the whole system worse. The government's going to come in and work with the banks to say, look, let's do this in a rational manner. Let's restructure as many loans as we can to the least we can to make it sustainable for the borrowers. And the government's going to help the banks get through this. In other words, they're only going to give support to banks that write down loans to the benefits to consumers and businesses. That's a win-win situation instead of letting everything blow up and then fail and everybody loses. And it just gets out. And once it gets bad enough, it's just you can't stop it. And the size of this, and I look at this, Todd, this bubble, and I've studied every bubble in history in the last 15 years after I realized we were really in a bubble economy like the Roaring 20s and other times in history. You can't even compare this bubble to any bubble in history. The size, the breadth of it, and the length of it. There is no way this ends up well. Every bubble in history has burst and burst badly. Again, 1929 to 32. This was a 5-year stock bubble. Crashed 89%. Blue chip stocks, not small caps, not junk stocks, okay? The bluest chip stocks, General Electric, General Motors, crashed that much. That's what happens here. And that was the best solution. You know what? They got rid of that bubble in 2.5 years. Bam! Never to come back again for decades and decades. Free markets know how to handle this, and the free markets, without the intervention of governments to stimulate everything and push interest rates to below market rates and all the stuff they did, that free markets would never let a bubble get this far out of control for this long. It would never happen. That's the problem. We don't have free markets. They killed the golden goose here, and now we're going to get the kick in the ass to say, you had no idea what you're doing, you idiots. I mean, this is the stupidest economic thing in history, and I've studied all history. Nothing in history will compare to this. The Mississippi and South Seas bubble were 99% crashes, but they were narrow little investments only for rich people in. It didn't kill the economy, okay? It didn't devastate the whole thing. It showed the bubble tendency of human beings and how stupid we can be in bubbles. But this is pervasive, and governments push this bubble in addition to the natural human tendencies to go for bubble. Everybody likes sitting on the couch and getting rich doing nothing. Who wouldn't like that? I like that. Anybody likes it. But this governments push this thing and never let it correct. And every time it starts to correct and get in balance, they just stimulate, they double down. So this is insanity. I think history's going to go, what were these people smoking? Did these people, were they, taking too many mushrooms or what here?
So you think with all certainty that this will be the worst housing crash that we've seen in the history of America?
Yeah, once it gets enough momentum, and that's what they're trying not to keep it from doing. Yes, there's no way it cannot be the worst. Housing is way more overvalued than anything. There's no comparison in history. Particularly, stocks have gotten this overvalued before, like in 29, in 1836, and 1873, and times like there's been times bubbles in stocks. This has happened before, and we've had crashes of magnitudes 80, 90% before. Never before has real estate gotten this overvalued, and never before has broad scale real estate, first of all, gone down even 34% as it did 2006 to 12. This time, if it's 60% plus, which I think is a slam dunk, if this thing gets enough momentum, this is a once in a lifetime, a once in two lifetimes thing. This won't be repeated for so long because it will hurt so bad.
So, Harry, tell everybody what they should be doing. If people today should back off of the dream of homeownership temporarily to the prices reset, recorrect, what should they do? All of your links are in the show notes below. They can follow you. People can subscribe to your newsletter, which I do, by the way. But what advice do you have for people to not dive in now to the housing market? Where should they be putting their money, and how should they be investing? You said bonds. Is that the only place?
Yeah. Okay. First of all, the only safe haven here in 2008 proved this because gold held up in the early 2008 after stocks started to go down and other things. But even gold caved about 40% in 2008. Even but real estate crashed everything. So 2008 proved that you could have an everything bubble burst. Everything went down, and the treasury bonds, the 10, 30-year treasury bonds, or the ETF TLT, which is a combination of 10 and 30, so it's an average 20-year. I'd rather have the 30-year because the longer the duration, the more leverage you get from this safe haven play. But the treasury bonds are the only thing that actually went up, and they went up like 30, 40% in 2008 when stocks went down 57%. And even gold went down 40% for a short period of time, and so on and so on. So it's an everything bubble. There's nowhere to hide except these treasury bonds. What you need to do, you have to look at all your assets, your retirement portfolio. You have to look at forget your life plan. Throw your timeline out. If you're thinking of retiring in 3 years and then downsizing to a smaller home in a retirement area, do it now. In fact, even better, sell your big home now, wait, rent for a couple years, and then buy your retirement home at a much lower price a couple years from now. Look at the economy's timeline is more important. Everybody has their own life cycle and plan on different sides. That's fine. That's normal. Now's not the time. This thing is so big, you got to look at the economy's timeline, the economy cycle, and adjust to it. Get out every financial asset you can get rid of. Get it. Even if you're collecting coins, sell the damn coins, okay? And rebuy collectible coins a couple of years from now. Sell your house and downsize and rent for a few years and downsize, or get a better house later if you'd rather do that if you're younger. And if you're older and you're going to downsize in retirement, sell your big house now and downsize later. Rent for just a few years. It's not a big deal, okay? Just to rent for a few years. I've rented several times in the last so many years. It's not that hard. It's not that you don't even have to tell people you're renting, for crying out loud. So you have to look at all your assets. Where's your exposure? Stocks are easy to sell. If you're not sure I'm right, here's the problem with stocks. The first stock crash in a bubble is 40 to 50% in a matter of months. So you get whacked so hard, but then if you get caught by that, you can wait for about a 50% retracement and at least get out a little work. Real estate's not like that. Real estate, once it gets questionable, everybody backs off and it's hard to sell anything. It's hard to move it at all. And again, I'm reading this article, and again, everybody studies Central Florida, Cape Coral. People can't even sell a house. They got houses, reasonable prices, 4, 5, 600,000, not millions, because that's why people were in Cape Coral. It was the only affordable place left in Florida. Well, they can't even sell their house at all. They're having houses sit on for a year or two when it used to be easy to sell houses. So when housing freezes up, it freezes up more broadly and it gets hard to sell at all. So I would be looking I would be looking at my real estate first and saying, what do I really not need here? And even if I own my own home and plan to stay in it for a while, do I love it that much to watch it go down 50, 60, 70%? If it was 10, 20, 30, I'd say no big deal. Okay.
So if
That's
it's
not
for
a reason to
sale,
sell. 50, 60, 70 is a reason even to sell your beloved home that you plan to stay in another 10 years. So but you don't have to do that. But at least you can do whatever else, sell other assets. I mean, I tell you one thing you could do. If you really wanted to keep your house, you could hedge your house in the stock market. You could buy a leveraged stock short on an index or something like that, like SQQ, 3 times short the Nasdaq. And if we have this crash, there's no question technology stocks will go down. Your leveraged hedge will grow and help offset your real estate loss in case you decide I want to stay in my home no matter what. So there's always things you can do to offset it, but don't say, well, I don't want to think this and Harry's crazy and I've talked to my financial advisor and he says this won't happen. I talked to my next door neighbor. He says it won't happen. Don't listen to anybody right now is my advice. I'm sorry. This is what I do is study cycles and history and in more depth than anybody studied more than me. I'd love to hire them or kill them. Okay. And just get them out of the way. I mean, I'm the person you got to listen to at a time like this because nobody's going to tell you. Everybody say, it's all right. In the past, every stock correction's gone to new highs. No, 1929 did not see new highs until 1953. If you'd have been retiring in 29, you'd have been dead before you got even, and you'd have suffered an 89% loss, and you would not have held through that loss. You would have sold somewhere far on the way down, and you wouldn't have gotten in until way too late again, because that's what people do. So this is just a time to be cautious. Don't look a gift horse in the mouth. Look at all your assets, especially real estate number one, because again, you can wait on stocks, engage, and you can sell a stock in a second any day of the week. No stocks, okay? Real estate can get very hard to sell, and you may not be able to sell at all once you realize you're in trouble. That's why I think real estate's the number one thing people got to look at. And frankly, they're happy to sell stocks, maybe to take a break. But most people, well, I can't sell my home. Well, look, most baby boomers are going to downsize into retirement anyway. So just look at the economy's life cycle, look at yours in favor. The economy's life cycle is saying, I'm going to die now. You may die 20 years from now, but I'm going to die now. Okay. So anything that's affected by my cycle, you better adjust into your life cycle. So adjust your life cycle for the economy's life cycle. And anything would tell, even with no sophisticated analysis, anything that goes up this long, and you will not ever anywhere in history find a real estate this boom big or long. That just tells you in history it means a bigger crash. No exceptions, period. So it's a time to be cautious overall. And I'm saying they've now pushed this so many years with 27 trillion in stimulus. Nobody knows that number. And people hear that number, oh, I didn't know it's that big. Yeah, it is that big. 1.5 times GDP has been poured into our economy to keep the damn dying thing alive in the emergency room. If you knew it was in the emergency room, would you be investing in it? No. They've hid that. They made the economy look as good as ever. It's not as good as ever. So you have to look at your assets, starting with real estate, and you have to move fast. If you wait to see if I'm right, particularly in real estate, it's going to be too late.
So what do you say to the sellers that, like what you're explaining in Florida, and I know this as much as anyone.
Already too late in Coral Gables.
So what do you tell the seller? Do they you tell them?
I'd say that you got to take a lower price. Take a lower price. It's only going to get worse. That's what this article said. Everybody's realizing this is only going to get worse. So you have to be decision. You can't say, well, I'm already down 20% or 10%, so I'm going to wait till it comes back. No, you'll wait and it'll be down 50% and you'll be crying in the street. So that's you got to get real here. And again, you can listen to me for free at harrydent.com. I got a weekly newsletter, comes out every week. I've got a paid newsletter and it's more affordable than most, but you can start listening to me for free at harrydent.com. Just go there and get on my free weekly newsletter. And at least you'll know what I'm thinking. And again, I've had to adjust here with all this stimulus. They are fighting This downturn should have happened between late 2019 and late 2022. Should have been a bigger stock crash than 2007 to 9. Didn't happen. Well, that just means it's going to happen later. And if you put something off, like anything in life, and be in denial, it's only going to kick you harder. End of story. That's a universal principle. That's not just in stocks and real estate.
Yeah.
So be decisive, be real, and act quick here. Time is running out from my point of view.
All right. Well, Harry Dent, thanks so much. And I look forward to watching this thing play out with you and having you back on the show.
Okay. Yeah. Talk to you again, Todd.
Thanks so much for watching. If you liked the video, you can let us know by smashing that thumbs up. And if you haven't already subscribed to our channel, please consider doing so now. Hit that alert bell. You'll know every time we upload content just like this. Keep those comments and questions coming. And one of the biggest compliments you can do for us all here at Sachs Realty is to share our channel and this video with your family and friends. This will help us to continue to build this amazing online community with viewers just like yourself. See you next time. Sachs Realty, Maryland broker number 607720, office number 443-318-4514, equal housing opportunity.